what we're going to be looking at here is available for sale securities here as portfolio stock securities here, and we're going to look at the adjusted fair value and any unrealized holding gains or losses on these securities. Now, for accounting here, you report the available for sale securities at their fair value with any unrealized holding gains or losses reported as part of shareholders' equity, and that would be exclusive of any interest or dividends on these stocks here. So those would have to be reported separately. So for example here, what we're going to have is we're going to have a portfolio here of some available for sale securities here, and we're going to be looking at the end of year X1 here and the end of year X2, and what we're going to have to do is we're going to have to calculate the unrealized gain or loss on these securities here, and then we're going to have to make some adjustments here to their fair value. So we'll get into that here. So what we'd have here for year X1, end of year X1 here, we're going to have these securities here, and we're going to have them listed. We're going to have three different stocks here, stocks A, B, and C, and what you have to do to approach these problems, you have to determine the cost of the securities that you're holding here, and then you also have to determine their fair value at the end of the reporting period here. So we have to determine our cost, and we're going to compare it to the fair value, and any difference is going to go to an unrealized gain or loss. Unrealized because we're holding the securities here and they haven't been sold, so we have any gain or loss is unrealized here. So let's what we have to do here, let's go through it here and just look at what we're talking about as far as this unrealized gain or loss. So just looking at stock A here, we had a cost of $40,000, fair value of $38,000. So our fair value is less than our cost by $2,000 here, so we're going to have an unrealized loss in this case. And same for stock B, cost $20,000, fair value $18,000. So again, fair value less than the cost, again an unrealized loss here, $2,000. And C would be, well, in this case we have a cost of $40,000, fair value of $41,200. So fair value is greater than the cost, so in this case we'd have an unrealized gain. Okay, so what you do here, you don't have to go through each of these here individually. All you can do is take and sum the total cost for all your securities here. Say it's $100,000 here, and then our total fair value of $97,200. So the difference here, cost $100,000, fair value only $97,200. So in this case, we'd have a loss here, the difference $2,800, because fair value here is less than the cost. Now, what you do here, individually we looked at them, so you can just net your amounts here. $2,000 loss, $2,000 loss, $1,200 gain is going to give us the $2,800 net loss here. So now this is what we have to do. We're going to have to adjust those securities here, the fair value adjustment. That's we're going to have to calculate that here, and we're going to look at it. The actual amount here is $3,400, and that's what we're going to look at, how we got that adjustment, how we make that adjustment. That's for year X1 here, and that's based on, we had a previous adjustment on these securities. That was in an earlier year. That was the last reporting period here, and that was, it's sitting at $600. So we have to come up with a $2,800 balance here, and we have a previous amount here of $600. So this is the amount we're going to get, $3,400. So let's go down and look at how we calculate that here. So here's our fair value adjustment here. Debit, well, we had started out with a $600 debit in that, for previous amount here was $600. And what we have to do is we have to get to a credit or a loss amount here of $2,800 here. So the only way we can do that is this is where we come up with that adjusted amount here, $3,400. So $600 here, and reduce, it's taking the $600 credit, a debit, excuse me, and the credit amount here of $3,400. That is going to be our required balance that we have for our the balance that is required is the $2,800, and that is our adjustment. So we can go back and look at that here. So going back up here, see, that was the balance that we required here, $2,800. Previous amount of the adjustment here that we had was $600, so that is our adjustment here for $3,400. Okay, so now let's go and look at our next year here, year X2, and in this case we sold one of the stocks here. So all we have remaining here, we got to remove that stock. It was sold, so that wouldn't be part of our available for sale securities here. So all we have is stock A and stock C sitting here. So can include stock B, and we haven't added any, we haven't purchased any other stock. So that's what we're holding here. Again, we're going to look at, we have to determine the fair value for the end of the period here, X2, end of year X2, and then we're going to just use our cost that we had previously here. Okay, so what we had, we did have some change here in our fair value, and we can go look at that here. Just to note here, stock A was 38,000, now it's 38,600, and stock C, we're sitting at 41,000 here. It was 41,002. So we have to go through the same mechanics here to determine any unrealized gains or losses, and we can do it on an individual basis here. Stock A, 40,000, fair value 38,600, so fair value is less than cost. So again, here's where you're going to have a $1,400 loss. Stock C, fair value is 41,000 versus the cost of 40,000. So here you're going to have an unrealized gain of $1,000. Now again, we could have just taken, you just sum your total amount here, and that's really what you're looking at here, your total amount. That was the total cost here, 80,000. Total fair value is 79,600. So the difference here is going to give us an unrealized loss here of $400. So really, you're just looking at your total amounts here. In both cases, you just total up your costs here, total up your fair value and net amounts here, and then just compare them to see if you got any gain or loss. Okay, so now we have to determine our fair value adjustment here for year X2. We're dealing with year X2. So again, we work off that previous adjustment here for year X1. That was that 3,400. We can go back up here and look at it. That was the 3,400. We just bring that down into year X2 amount here, and we have the $400 balance, loss balance that we need, and we have our previous adjustment here, 3,400. We're going to come up with the 3,000. We can go down and look at our account to look at that. So here, our fair value adjustment here for year X2. So previous amount here, we had at the 3,400. That was a loss credit amount here in our adjustment account for 3,400. We have to get up to the balance here of 400, a loss amount here of 400. In order to do that, you need obviously a credit balance here to your fair value adjustment. So 3,400 credit reduced by your debit amount here of $3,000. That's our adjustment. Fair value adjustment account is going to give us a credit balance here of 400, or a loss amount here of 400. So that's how you do it. Just best way to look at this is just to lay out your fair value adjustment accounts and look at your debits and credits. Whatever your previous amount is, you have to start with that, and then you have to look at what the balance that you need in the account, and then you have to make your adjustment off of that. In our first year here, we had a debit amount of 600. We had to get down to a loss of 2,800. So the only way we could do that here is come up with a credit of 3,400. And for year X2 here, it was just the opposite here. We start out with the previous amount here, credit that we had, or a loss here, 3,400. We had to get down to 400 here, loss. So in this case, you had to debit it for $3,000 here. Okay, so we've taken care of that. Now let's go and look at how we'd record this here. Okay, so here's where we're sitting here. Our available for sale securities, we're going to look at the fair value adjustment here and how we'd record these available for sales. So when you're dealing with the available for sale securities, you're going to set up a specific account here. This is where they're all going to be lumped in at the portfolio's cost. Whatever the cost is, you just total it and put it in here. So available for sale, we're sitting here at $100,000 here. But what we really want to look at here is this tied into this available for sale securities, we set up a valuation account here, and that's that fair value adjustment that we were working off here for the sales here, and we label it a fair value sales here. And what this valuation account does here is any changes here in our fair value account here, adjustment directly affects the available for sale. So any increases in our fair value adjustment increases our available for sale securities, and any decreases in it reduces our available for sale securities. And with this valuation account, we don't do it directly here into available for sale securities account. We do it in this fair value adjustment account. And then tied into our fair value adjustment account, this is where we're going to look at an unrealized holding gain or loss as part of equity. Okay, so let's start out with what we have here. We debited our available for sales at the cost here, total amount $100,000. But in this case, we also have to look at the fact that we sold one of those stocks, and that was stock B here. Its cost was $20,000. So we'd credit out our available for sales, reduce it by that $20,000 amount. So we're going to have a net amount here of $80,000 after that, and then we have to record that sale of the stock here. So in this case, it was sold for $19,000. So we debit or increase our cash account here for $19,000, and then we have to also recognize the loss here on that sale. So that was our cost less our fair value. Cost $20,000, fair value was $19,000. So we have debit here, a loss of $1,000 on our income statement. Okay, so that takes care of that. So when you have these available for sale securities and you're working from period to period, if you have any additions to it, you have any increases in those securities here, you buy any, in this case it was stock, adding that to your portfolio, you'd have to adjust your available for sale securities. You'd increase it here, and if there was any sales, then you would decrease your available for sale securities and at the cost. And then you have to recognize any gain or loss on those securities here on your income statement. Okay, so now let's look at this fair value adjustment account. Again, we said that was a valuation account. It adjusts the available for sales, whatever that fair value was, adjustment. So let's look at that here. So for the first year here, remember we had that credit amount here, or a loss of adjustment here of $3,400 that we calculated. That was the end of year X1 here. Again, we labeled that fair value adjustment securities for the available for sale securities. So credit our adjustment account here for $3,400 for the loss, and then we go over to our account here, and it's an unrealized gain or loss in the equity here on the balance sheet. It doesn't go to the income statement. It stays in an equity account here. So we would debit that here for $3,400. Now that was at the end of 12/31/X1. Now, and then the other adjustment we had here was at the end of the second year here, 12/31/X2. Remember that fair value adjustment was debited here for $3,000. So debit here on a fair value adjustment, unrealized holding gain or loss here, credit it for $3,000. Again, that's on our balance sheet and it's part of equity. So that's the important point that we're making here. It doesn't go to the income statement. It just stays as part of equity here on the balance sheet when you're dealing with the available for sale security. So that's the point we want to make, and it would be reported as other comprehensive income here in the equity section of the balance sheet. So just remember here, other comprehensive income in the equity section, and it would be included in shareholders' equity. So here's our fair value adjustment valuation account. And if we look at, let's just look at year X2 of this fair value adjustment. So net amount here and available for sale here would have been $100,000 less our $20,000 sale amount sold here of the stock. So we'd have $80,000 here. And then our fair value adjustment, that was sitting at debit amount here of $3,000. And that directly increases our available for sale securities. Add it to the $80,000 here. So our fair value of those securities at the end of year X2 here is $83,000. So just remember here, when you're working with these available for sale securities, you have to set up a separate account here and on your balance sheet here, and remember that is at the cost. Whatever the total cost is, you set it up as such and you put it down in there, and then any activity for the year here on those securities, you're either increasing them or decreasing them here. You recognize any gains or losses based on those activities here, and then you have to set up this fair value adjustment account here for the available for sale security here, and that's based on those end of period adjustments that you had to make based on the cost versus the fair value of the securities here, and then any of those adjustments here to the fair value adjustment account here and for the securities, that is recognized as unrealized holdings gain or losses, because those stocks haven't been sold, we're holding them, but they're unrealized here either as a gain or loss, and that's part of equity. So just remember that here, part of equity, and it's reported here as other comprehensive income. Okay, so that takes care of our subject here on the available for sale securities here, and we looked at them in terms of a portfolio here where we had some stock securities.